Hey guys, what's up and welcome to a new Tesla update video. So it's a fresh start to the week. Let's go over Tesla. Let's go over what so far has happened today. 2.5% down, by the way, but it feels like nothing happened at all, honestly. But let's talk about it. Tesla ending the day also at 191, or just shy, I guess, of $191. Compared to the market, it was a weird day. And the reason I say it was a weird day is because Tesla has been essentially underperforming the market the whole day, but the market went from being up like 1% to being down 1% and kind of back and forth over and over, while Tesla pretty much stayed around 2% the whole time, give or take. Like, it almost went green actually, then it went back to like 1%. Pretty much Tesla's been red the whole day, right? While the market was between red and green the whole day. So just a very strange day, to say the least. But let's go over it. Let's talk about it. Let's see what we can analyze and what we can dissect from this. As you can see, Tesla's candle, right? Just an example of how it looked like, right? You can see Tesla's candle something like this, while for instance SPY is something all the way down here, right? So pretty bearish looking day actually, now that I look at it, for the markets in terms of a candle. This is like a potential reversal sign of a candle to back to the downside, so we'll see what it actually ends up being. While Tesla is kind of neutrally, honestly, it's not really bad or good in all honesty, so we'll see what that means. But let's jump into the detail a little bit more. By the way, if you enjoy, don't forget to hit that like button. Remember, none of this is financial advice, but let's get into the party. So we talked about Tesla's performance for the day, but now let's talk about it on a slightly shorter time scale. So the first couple things I see are this, right? So there's good things and bad things. Similar to what I said yesterday, nothing really changed from what I said, not yesterday, Friday. Nothing really changed from what I said Friday, but we'll just quickly go over it one more time. For the good news, for the, for the bullish news, for the bullish, I guess, side of things, right? You can see that we have a potential inverted head and shoulders more or less setting up here, which we want to break. In my opinion, honestly, breaking above this kind of like 195 to the gap fill around 197 are the key levels to break, and that'll easily send us up to 200. And then I really want to see 200 to 204 break as well. Those are my right now two kind of major levels that I'm personally paying attention to, that I want to see being broken. So that's kind of one aspect of what this can potentially lead into. Another thing that we could potentially look at this from the bearish angle, however, is the fact that this could just be a bear flag, right? We have a massive fall down like this from pretty much Elon selling, actually, literally from here to here, right? From Elon selling, and now we have essentially what could be, again, it doesn't have to play out this way, but it is in the favor of playing out as a bear flag. Right? So that's something else that we have potentially coming up here. I wouldn't be surprised if we actually do get a rally up to like maybe, this kind of 200 to 204 level, which could still hit us the top of this channel over here. And then maybe you get rejected from there and fall. Like, it's hard to say for sure. But essentially what I'm seeing is pretty much more or less a bear flag being set up at the very moment. So obviously, hopefully, it doesn't play out, because I personally don't want it to play out, especially considering Tesla has already fallen so much, so fast, that it kind of makes you wonder, when do we even get an actual bounce, right? Personally, I strongly believe that this level that we, recently came down to, the low point of around this kind of, 177-ish, I really do believe that could be a short-term bottom. I really do. I really think that we can potentially get a bounce from here. I think, honestly, for now, worst case, maybe we get a double bottom and then we can potentially get some relief. And the main reason I say that is because we haven't really gotten any actual relief yet. I mean, you can argue this was a relief, but it was a very small relief rally, right? So, it kind of makes you think that, when is the actual relief even coming, right? You can't just only go down just as much. You can't only go up. So that's kind of what I'm seeing at the moment. But in terms of just kind of, working off of the levels, the main thing that I'll be paying attention to for the bulls is essentially a break above this kind of gap fill, I would say, is the first level you want to watch out for. So like 196-ish, let's say, to make it easy, to the gap fill 197-ish, right? So that level is the first level. Second level being 200 to 204. Very important level to break up as well. And then if we can break 204 and start holding above that, then we can start talking about, okay, maybe that is the short-term bottom. Maybe we can actually get a finally a relief rally. But until that happens, it's too early to celebrate, in my opinion, right? However, on the downside, if you're a bear or you're looking to short or, whatever, any of that stuff, tomorrow, by the way, don't forget, we get the price consumer, the PPI, I believe, index, I believe it's called. The PPI, I believe. We are getting that tomorrow, so keep that in mind. Let me just quickly double check that. Yes, tomorrow we are getting the PPI numbers, so that can definitely affect the markets and see what that does, in terms of inflation and whatnot. So we did have a massive sell-off, by the way, towards the end of the day, so maybe someone knows. Who knows, right? We'll see tomorrow. However, if you're a bear, essentially what you want to see is this bear flag play out. It's really just that simple. Pretty much you want to see it come out of this little channel that it's in right now, which will pretty much be anywhere solidly under 190, in my opinion, is starting to get a little bit spooky. But if we fall below like 187, that's starting to get a little bit bad. And You know, especially if we fall below 182, then we're most likely revisiting this 177, probably to get a double bottom or something like that. And if of course we break this 177, 178 level, then we go down even further. So those are like more or less the levels you want to be kind of, you know, roughly paying attention to, right? Now, if we go back to the daily, as you can see, as we have gotten this rally, we did come up to the kind of median, if you will, or the average, the kind of, you know, greenish line over here. We did get rejected at that as well. So we're having a bit of issues there. Taking a look at the major things that we care about, the 21 EMA, which I personally still wouldn't be surprised if we come up to at some point soon. Following that, we have the Bollinger Band. Also wouldn't be surprised if we come up to the white line. You can see it is starting to expand. So this was the massive move that I was talking about, which was a fairly decent move, right? Considering like when we were still kind of getting, you know, pretty tight over here, we came down from all the way, let's say from the high of this candle over here to the bottom of this candle, we went down 20% in like literally 4 trading days, which is obscene, right? That's quite a bit. So that, you know, it's starting to get expanded, which I guess in a way is a good thing. That means potentially that big move was, you know, this right here. Now we're potentially going to contract, maybe consolidate. So we'll see what that, you know, happens or where that takes us. Moving along, of course, we have the 50 and 200 are way above us. We don't care, but we are still actually above the 5, which is, you know, a good sign. However, the 10 is still sitting at pretty much $200, which is something that we definitely want to be breaking above. So like I said, guys, for if you're a bull, the main levels you want to pay attention to is getting above this gap fill at 197-ish. So like 195.5 to 197, this level here, it's important that we're having issues with clearly. And if we get above that, we want to pretty much break the 200 to 204 level, which was the old, you know, major resistance or support rather we had here, plus of course the 10-day moving average. So those are the main levels for the upside that you want to kind of see. And for the downside, in my opinion, it starts getting a little bit spooky, even honestly just under like 189-ish, let's say, is where things can get a little bit scary and a little bit spooky and, you know, start, you know, making you wonder, wow, maybe we actually go even lower still. Very possible, very, very possible. In a market like this, guys, you never really know for sure. But let's take a look at the 1 hour chart very quickly. So one thing to pay attention to here is the fact that as we kind of, you know, on the 1 hour chart came all the way down to this new low over here, you can see we did already start making a bit of a bullish divergence. And even though we came all the way down to these levels over here, even back on this situation here when we are 186 on the RSI, you can see this RSI over here did not even go lower than these two levels back here, which is something else that's important to consider, right? If we take a look back at where that was all the way back up around the 240s, right? So that's something else to consider. And as long as we keep going in the longer time frame, you can see actually in the 2 hours it's quite the opposite. In the 2 hour we did make a lower low, which isn't great. 3 hour made a lower low. Even the 4 hour, 4 hours not, it's a lower low, but it's substantially less obvious. So that's, you can argue that being a double bottom, similar to the daily chart as well, or you can argue that being a double bottom as well. So there's a lot of mixed signals, guys. That's just the easiest way of saying it. There are a lot of mixed signals. I am a little bit more biased to the upside, maybe because, you know, I have more upside exposure than downside exposure finally. However, you know, with that being said, there is still definitely a chance that this bear flag breaks out, and I don't think this will be a massive bear flag, especially if it just breaks out from here right now, let's say tomorrow. This to me is a very small bear flag in that case, right? Which in that case, personally, I would think probably, I think the quote unquote potential worst case scenario realistically would be the fact that we get a retest of honestly 180 and probably just get a more or less double bottom bounce off of that. And we essentially make a double bottom recovery pattern, which would look something like, where is the thingy? Here we go. Something like, this, right? Something like that. That's just a theory. Again, that's just an example. It could not be that whatsoever, right? It really just depends on what happens tomorrow with the PPI numbers and where this kind of, you know, takes us for this overall. But very important to pay attention to everything else in the market as well. So you can see the VIX actually recovering just barely above this channel. So it's getting a little bit spooky there as well. Looking like it wants to bounce. The daily closure on the SPY today is not looking very hot. I'll be completely honest. This is a decently bearish looking closure on the SPY. However, even with that being said, I personally still have a price target on the SPY of about $410 per, before I think that we can actually start getting some potential real downside continuing from here. So we'll see if that ends up happening or not. But that is my current price target. So what I'm hoping for is that Tesla can finally start actually showing some strength on a weak market. It hasn't been doing that, but hopefully we can start seeing that sooner than later, because I think it needs to, in order for us to get a potential actual, you know, potential rally here, since I believe the SPY is really not that far away from a potential top, which actually, surprisingly, it's still 3.5%, which is actually almost 4%, which is actually more than I thought. Honestly, it's about 4% still. But even with that being said, you know, I still think that the SPY around 410, I will personally enter some shorts there. Again, I will be. I'm not saying anyone should. I will be. I will probably start scaling in around 410 to you know, SPY puts as a hedge. And we'll see what happens with that. But that's essentially what I'm seeing, what I am currently eyeballing. Ladies and gentlemen, let me know what you think down below. Not a whole lot today in terms of Tesla, mainly because the structure hasn't really changed from what I talked about on Friday. Nothing major really happened today. It's just kind of, even though it's down 2.5%, it is still overall kind of consolidating, still within the same more or less area as Friday. So nothing really changed too much in that specific instance. So we'll see where this takes us. Ultimately, I still think Tesla is looking like it wants to try to make a potential recovery. And I think the realistic worst case for now is a potential double bottom back at this kind of 180 to 177 level, if we break out as a bear flag, let's say tomorrow. But that's kind of what I'm expecting at the very moment. Guys, ladies and gentlemen, if you guys enjoyed the video, don't forget to hit that like button. Of course, if something actually major happens, if certain key levels are broken for better or for worse, I'll let you guys know if I see anything like that. The volume today, you can see, is slowly decreasing on the red day as well. So that's, I guess, a good sign. But yeah, that's it, guys. Let me know what you think down below, and I'll see you tomorrow. So until then, peace.